The US Consumer Price Index, CPI, is one of the most important high impact news events for gold, XAUSD, because it directly influences expectations for Federal Reserve interest rates, the US dollar, and Treasury yields. Now, the recent market reactions have continued to reflect this relationship, and in this video, I'm going to show you exactly how to trade CPI or how you can anticipate moves. This video is specifically, dedicated to CPI. I'm gonna do another one for NFP, non-farm payroll, and any other where which you guys are interested. So I'm gonna show you exactly why we had this move here and how you can be able to, take advantage of this. And we're gonna be using Forex Factory. We're gonna be using Forex Factory, and this is what we're gonna be using for, map everything out. So that being said, my name is Rocky Calvin, and welcome to Cash Line Trading. You can like, subscribe, and let's get to it. Before I get into news, I want us to take a look at a little bit at the technical side of things. Whatever happened here was already anticipated to happen. Okay, news was just a driver to push it towards liquidity. I want to show you quickly before I dive into CPI. Let's take a look at what's happening here in terms of order flow. We're just coming from taking some liquidity over there, and price is now giving us bullish price action. If we take a look on the other side, we have this institutional this institutional level, because you see this big candle here. Always these big candles, they usually act as very very important levels to pay attention to. So if I map it out, just this is a few minutes before CPI. Okay, I want to take a look at what's happening here. In previous video, I taught you guys about market structure shift and so on. So over here we have this bullish gap, then we have inversion of it. Price drops down where to? Exactly, you see that, where did it go to? This institutional level right there. Then remember, CPI is coming, then we start pushing high again. We drop a little bit to the consequent encroachment, and we respect that consequent encroachment of this inverted fair value gap here. This was already telling you that news is gonna be pushing up high, and of course we had relative equal highs here. We had liquidity here, we had liquidity here, and you see this is where the wick, the new wick opened, and you can see it gapped down here. Okay, so let's take a look at how CPI kind of affected this. And first of all, when you go to forexfactory.com, the first thing you wanna do, you wanna go to calendar. When you go to calendar, I want you to go and filter. Now remove anything that is not US dollar. Just leave US dollar only. So remove NZD, remove JPY, remove GBP, remove Euro USD, remove CNY, remove CHF, remove CAD, AUD, then apply filter. Then we're going to be dealing mostly with only I like only the red news only. So let us deal with only the red news. That's what matters. This other folders doesn't really matter, but red news folder, that's what matters. So let us apply. So what's happening here? Seems like we don't have any red news in this incoming week. So let us go back to last week, because today is Sunday. So today's date 19th of July when I'm doing this. So let us go back to last week. So last week, as you can see, Monday we had nothing. No red news. Tuesday we had some red news. Wednesday some red news. Thursday and Friday there was nothing. So let us take a look at this core CPI. We had like massive CPI news at I'm using UTC Plus, so you might see 3:30 p.m. but this is different. In New York time, this is supposed to be around this is gonna be 8:30. Yeah, this is 8:30. So let us go back here. So already the price action, whatever you're seeing here on 15 minutes time frame, is already showing you that price is just some people would definitely call this is it support. I don't know. Yes, support. They'll say this is not support. Then breakout. But all these things work. So I don't care what you're really trading. If you're trading ICT, if you're trading retail concept. My point is just to show you guys how to trade CPI, or how to know how CPI is gonna work out. Now I want you to understand one thing. How CPI affect USD is like this. So the first thing is, if CPI is higher than forecast, meaning that it is bullish on USD, then definitely gold is gonna go down. In this scenario, I want to take a look here. So over here, let me, for example, open this folder here. Okay. The measures this is the change in price of goods and services purchased by consumers, excluding food and energy, right? So this is the important part. The usual effect. Usual, actual greater than forecast is good for currency. So if you take a look at here, this is the forecast. Forecast people were forecasting at at 2.8. So previously it was 2.9. So people were forecasting 2.8 for it to push what took a little bit lower, right? Because if previously it was 2.9, people wanted to the focus was around 2.8. But unfortunately, when the actual comes in, we get 2.6 immediately. This is bad for what? For gold. Remember, this is USD we are dealing with. Gold is competing. If you take a look at this pair here, it is XAU USD, meaning that gold against the dollar. So when gold is going up, dollar is going down. When dollar is going down, gold is going up, right? Now let's come back here. Actual, this way now, this is how you read these things. When actual is greater than forecast, this is good for currency. What is the opposite of this? When actual is lesser than forecast, this is bad for the currency. What currency are we talking about? US dollar. So if something is bad for US dollar, then definitely means that it is good for gold. So this is what happened here. Take a look. The actual forecast came less than what was was forecasted. The actual readings, they became less than, because people the focus was 2.8, but unfortunately it came 2.6. What does this say? This is bad news for the dollar. So if it is bad news for the dollar, and you take a look at price action, what has been happening here, then boom, we have liquidity up here. So this is where like we going up. So there we immediately, when price started pushing out, you just decide, what, let me drive this move. You stack positions, then you start exiting them once liquidity is being taken here, right? After news, this is now my secret. After news has been read, 15 minutes later, exit all positions. Don't leave anything. 15 to 20 minutes, always. That's what I usually do. Exit all positions. Don't be greedy that now it's past 15 minutes and then you think because you bought here, price is still gonna just come back and take you all the way to the moon. Oh my goodness, you'll be disappointed, right? So this is how you can merge the technical side of it with fundamental side and in trading. Okay, so why do most of the time when CPI goes higher than forecast, usually end up becoming bullish for XAUSD, sorry, for USD, I mean US dollar, because inflation is hotter than expected. Then traders expect the Fed to keep interest rates higher for longer, or even raise them. So when the interest rates are risen or they're kept higher, definitely that's going to be attracting investors. When investors are attracted, they're definitely investing in the US dollar. When they invest in the US dollar, meaning that the American dollar is going to keep on rising, and that's negative for gold. That's why when you have an actual that is higher than forecast, then definitely that's good for the dollar. Okay, so gold will always fall because high yield will increase the opportunity cost for holding non-yielding asset like gold. Gold is not it's a non-yielding asset. It doesn't pay interest, right? But we're investing in the US dollar will for example, you as an investor, you're gonna be paid that interest. You're gonna make money. But with the gold, it is non-yielding asset, right? So guys, this is how to trade CPI. Let me just give you another example, the opposite direction. So in case, and definitely this is the same thing happened. So it was on Wednesday, we also had CPI. I think it was around here. Yeah. We had CPI, right? And Wednesday, definitely price only went, where price was supposed to be delivering was on this, bearish PD right here. But unfortunately, it pushed higher, took some liquidity. But as I told you guys, after 15 minutes, exit all positions. If you follow this rule, this retracement down here would not affect you. Okay. After 15 minutes, after that news, exit all positions. And how do you exit? Start targeting, take profit to this PDRAs. this swing high, this liquidity, and finally there. If it doesn't reach there after 15 minutes, walk away. Now, if CPI is lower than, let's go back to Forex Factory. If CPI, is lower than forecast. So, for example, forecast is is 2.8, right? And I think I've already explained this, right? So it definitely means that inflation is cooling, so market price is higher than and there's a high probability that Feds are gonna have rate cuts. So if it goes lower than forecast, definitely that's what it means. Price is higher. Sorry, price is in a higher probability that the Feds are gonna have the rate cuts, but also the the USD Treasury yields tend to be weakened whenever this happens. Whenever you get lower than forecast, right? It is just easy right here. Actual greater than forecast, good for currency. So the opposite of this, just the same thing. If you guys have any other question, or you want to know how to trade news and so on, just let me know. And that being said, if we go back to Forex calendar, and let's see what's happening. For example, next week we have no red news. If I go back here and filter in, maybe let's allow some a little bit of yellow folder. Let's apply. Yes, we see we have some little this very tradable news. This is very tradable. So if you're a beginner, don't gamble. Don't try to trade CPI. Don't try to trade NFP. I'll do another video for NFP. Don't try it. This is for people who understands what's going on. And I told you guys pretty much the same thing. This was an institutional level. Let's map it out. Let's map it out. Let's map it out. Unfortunately, this CPI, this news price was not, price had not, tapped into that level. But if you take a look at here, take a look at this, where we dropped, because this is the news of the previous day. You see this big massive candle, the CPI. We're like consecutive CPI, news, right? So we take a look here and we see, we pushed higher against that PTO, then price came back pretty much to that area before going back to deliver. So this sometimes becomes a trap. That's what I'm saying. After 15 minutes, walk away. Once you realize that the ratings are as such, then that's it. Because with CPI, with the experience, CPI doesn't usually attack both sides the way NFP usually does. NFP is quite dangerous because NFP usually sometimes it attacks down the liquidity below first, then push higher. So that can trick you. But CPI, with most of the time, what I realized with CPI always push price higher. It never relents. So if you take on if you take a look at lower time frame, for example, maybe 5 minutes, you would have even got a better a better understanding, because you see now you'd see that we are coming from that period that are that inversion, and you see we created a gap here, 5 minutes gap, then price has finally come to that gap and respected it. You see it. So when CPI is coming, for sure there's a possibility of us going higher, so that you can just engage and put your stop loss here. So if you're trading personal, of course with the pro farms you're not allowed to trade this, but if you're trading personal capitals, capital that you want to flip an account, just first thing you do, ensure that you don't put all your money in that. Just put in that account what you're willing to risk. So let's assume, for example, you're willing to risk only $100 in this CPI. So don't ensure that your account doesn't have $1,000, because if you have $1,000 and CPI or news goes against you, then you're gonna lose it all. But if you have $1,000, make sure that you remove the 900. You only have $100. If you want to risk only $100, so that 100 is what you gamble with here. Okay. I don't like choose the term gamble. Gambling is when you don't know what you're doing. Okay, some people say it is gambling, but if you understand how to price and know exactly what you're doing, then definitely you can use this. So this is it for today, guys. This was about CPI and this part of fundamental analysis, how to apply fundamental with technicals, and especially how to trade CPI. So I hope this was helpful. So see you guys in the next one. If you have any question, leave a comment and make sure to subscribe and share with somebody.